Learning Objective 17-8. I'm going to go through this and then I'm going to go back to the long example with a general fund and to go over everything together in one long example. So make calculations and record journal entries for basic interfund activities. And a lot of monies flow back and forth between different funds. And of course, government accounting requires that you keep all this money separate, and you have to keep an eye very carefully on when money is flowing back and forth between different funds. There's 4 ways to transfer funds. One, have interfund activities, I should say. One is a loan between funds. Another is when one fund provides a service to another and the other one uses the service. Another one is what's called interfund transfers, where you just transfer money from one fund to the other. And the other is called interfund reimbursements, where one fund pays for something on behalf of another fund with the understanding that it's going to get paid back. And let me give you some examples of this. Just a little note here. Loans between funds should be repaid, usually within a year or by the end of the fiscal year. They're usually not shown on a fund statement of revenues, expenditures, and changes in fund balance because we want to clear it before we prepare the statement. Excuse me, it's not shown on here because loans between funds don't, it's not revenues or expenditures or changes in fund balance. And loans should be shown on a balance sheet as payables or receivables. This here is not necessarily true. Stick with this. Must be shown on the balance sheet as payables or receivables. I hope you're impressed by all my colors here. So the first thing that happened was the general fund loaned money to the internal service fund. So in the general fund, you would credit cash for $4,000, and you would debit due from internal service fund $4,000, and now they have it in a receivable. And on the internal service fund, you're going to debit cash for $4,000 and credit due to general fund $4,000. And now the internal service fund pays them back. So the general fund receives cash of $4,000 and credits due from internal service fund $4,000, and the internal service fund receives pays the cash, so they're going to credit cash for $4,000 and debit due to internal service fund $4,000. Now let's say the internal service fund, remember that's the fund that provides services to other funds, and the ISF provides services to the general fund amounting to $100. So for the general fund, that would be an expenditure of $100, and now it creates a liability due to internal service fund $100, and the internal service fund would have it due from general fund for $100, and the credit would be to charge for services, which would be like a revenue for $100. And then general fund pays them back $100. So the general fund is going to credit cash for $100 and debit due to internal service fund $100. And the internal service fund is going to debit cash for $100 because they're receiving the money, and credit due from internal service fund, general fund $100. Now let's talk about transfers. Let's say they transfer $10,000 into the capital project fund to start a capital project. We'll do a capital project in the next chapter. Debit cash for general fund will, I'm sorry, they're not going to debit cash, they're paying cash. So they're going to credit cash for $10,000. And the debit account is going to be other financing uses. These would be things that are not expenses. In fact, I'm going to abbreviate it because I'm going to need to later. OFU. Transfer out to capital project fund for $10,000. So this is going to be considered an OFU. By the way, a lot of students miss this on quizzes, so this is definitely something that you want to know. Capital project fund is going to receive cash $10,000 and credit other financing sources, transfer in from general fund $10,000. So that's a third kind. The fourth kind would be a reimbursement. So let's say the general fund had laid out $3,000 and it recorded an expenditure which really should have been done by the capital project fund. It doesn't show you the journal entry here, but the journal entry would be to debit expenditures and credit cash for $3,000. That's what the general fund originally did. And now the capital project fund is going to pay them. So they're going to debit cash for $3,000 and credit expenditures for $3,000. And the capital project fund is going to debit expenditures for $3,000 and credit cash for $3,000.